So there may be something that you're just missing when it comes to selling your business that can negatively impact you going forward. And that is the taxation and the structure of your entity when you're looking at a potential sale. And so we're going to dive into these really briefly here now, but then we're going to have a more in-depth conversation about them here in the coming future. But the first thing that we want to talk through is the entity structure. So whether you're an S Corp, LLC, C Corp, however you're currently structured, this may not be the most optimal structure for you as you prepare to exit your business. And so this is where you want to have a good, solid conversation with a business attorney, a tax strategist, CPA. You want to make sure that you have these people in the room so that you can really sit down and talk through how you're looking to exit your business. And then also know what your options are and how that's going to affect you from a taxation standpoint. This is important, and unfortunately, a lot of business owners don't really take this into consideration before selling their business or starting the negotiation process. And then the second thing is really understanding your purchase price allocation options. And so again, so remember we talked about whether it's an asset sale or a stock sale, really the way that you exit your business is something that you need to think through and how you're actually going to get paid, not just exiting. I'm going to get out of this thing. Well, let's look at how you exit from it financially. So a lot of times, so let's just say your business is worth maybe $15 million and you have an upfront purchase amount of $10 million. Well, that $5 million could be on the back end as an earnout. And this is where, as a business owner, you stay engaged in the business and you basically ensure that its cash flow stays where it needs to be, or there's some level of growth that happens over a period of time, and the purchaser pays you out over that period of time up to the amount that you're originally looking for. So you have to think, as a business owner, am I prepared to stay engaged in my business and stay involved and continue to foster those relationships and make sure that we maintain those relationships and pass that on to the new business owner going forward. And so if you're able to do that, then great. But some business owners, they just want to get out. They've been doing this thing for 25 years and they're ready to exit. And they're like, listen, I understand 15 million will come if I stay involved for another 2 to 3 years, but I'm willing to just take, maybe 10.5 or 11 million now, and I'm completely done. And so if that's you, then that's fine. It's good to know, but you need to understand what's going to happen in terms of how you receive that money. And then going back to point one, how you're structured is also going to dictate how you receive that money and how you're taxed. The last thing that I want to look at is exploring QSBS eligibility, and that's going to be qualified small business stock. Now, this is something that can significantly reduce your capital gains as a C Corp business owner. And now we're going to dive into this. We're going to have a tax strategist that's going to come in and we're going to dive into this more closely for you and really spell out what that looks like. But this is definitely something that you want to make sure that you have a conversation about, because in order for this to really work, you have to be a C Corp. And so if you're not a C Corp, then maybe there's an opportunity for you to make that conversion so that this makes sense. And then there is a time frame. We want to make sure that you're a C Corp and that it happens within this time span and that you maintain that status while you're going through this process. That's going to be important as well. So again, that goes back to looking at your entity structure, looking at your purchase price allocation. These are 3 things that you really need to make sure that you have on your radar as you're looking to exit your business. And we're going to dive into each one of these a little more here in the near future. I hope that helps you guys. We'll see you next time.